Okay, I'm gonna show you the trade that I took, right? This is the entry that I took at all-time highs, 30,627 with like a almost like a 30 point stop. And this was the execution. You can see from the top till the bottom, right? We got good almost like 400 points. Now, you might tell me, okay, you only got 400 points. What about this? I mean, I was eventually in the first place. I mean, initially I was aiming for this, right? But I closed it right here. Don't remember why I closed it right here because I think it was late in the day. But let's go over to the trade recap, right? So I use these indicators just to see the sessions, the macro timings, and whatever, right? So basically, what I trade is how I trade is. Let me just give you a quick example, right? In my mind, I think about the weekly candle, right? Now this is the week. Um, let's say we have Monday, Tuesday, Wednesday, Thursday, Friday, 5 trading days, right? What I usually like to skip Mondays because I don't know what the market is doing, right? So let's say if the market opens like this. This is Monday, Tuesday, Wednesday, Thursday, Friday, or probably just rebalances like this, right? So there is something called a very important concept is I'm gonna yeah, there's something called OHLC and there's something called OLHC. What is OHLC and OLHC, right? Open high, low close, open low, high close, right? So usually what happens is you need to understand. Once you understand this, reading the charts becomes so easy, right? You need to understand most of the times Monday sets up a high, right? That is not the real high. Tuesday sweeps that high, right? What Tuesday does is sweeps that high. You need to understand the days. You can't be trading every day thinking I'm gonna hit a trade. There are times where I sit in front of the trade and I don't take any trades, right? So what happens is the week opens, Monday sets a high, creates a fake break or something. Tuesday sweeps that, right? Wednesday, or I mean the same day you get some rebalancing. Wednesday you have a very nice high probably trading day, and then we go take out all this liquidity on Thursday, and then maybe on Thursday in the evening we have this sweep up, and then Friday we close somewhere here or somewhere here. We don't take this high, right? We leave it for next week. We probably start on Monday, we do this, and we take out those highs, right? You might think this is some stupid shit, but try to implement it and see how it works, right? So what happened here, right? This, let me just get rid of this. This was basically the opening gap, right? This was basically the opening gap. We have this huge gap right here. Let me just get rid of this, right? I'm on the 5 minute because I want to show you exactly how it works, right? Now, we open the market from 29,650 to 29,937. It's almost like 300 points gap. We open up. Now, you need to understand that the weak opening gaps are a strong drawn liquidity. The price is really attracted to go fill this gap and then continue higher, right? They don't want to leave these inefficiencies. What happened on Monday? You can see the prime example why I don't trade Mondays. We started going up. You don't get these gaps filled. Going up, just going up. So where are you gonna enter? Where is it gonna be a stop? Your stop loss? You don't know. It just keeps going up, right? What happens? Monday, you can see we set this high. You can see this line. We set this high, and then we are actually going down. People who are zooming in and looking at these trades are saying, "Okay, we make this high. Now we are suddenly going down. We are in a downtrend. Whoa, we have this breakdown. Boom, right? What happened? The market sweeps them, right? You can literally see the market just says, you know what? It's time for you to get swept. How do I control? How do I move this? Uh, Whatever. You can see, right? This high is fake. You can see we come closer, we give a reaction, small reaction in the London session, and you see the candle. Just look at this candle. How quick and hardly it just destroys all the sellers. 562 to 612, like a 50, 60 point candle in 5 minutes, right? We sweep it up. What happens exactly then? I always tell in my model, I can show you, this is the model that we trade, right? We have early liquidity, inducements, tap, boom. We don't look for more confirmations. You can see liquidity, tap, boom, same. Liquidity, we have this fake touch SMT because it was, we are in an uptrend, we have done falling, and then we tap in this POI on the 50-minute order block, boom, boom, mitigation entries, right? So What happened here is when I saw this move up, and I don't like to trade early London session, I will look for the ending of London session and the beginning of New York, right? We can see the market moves up, creating this trend line liquidity right here, right? This was a fake high. This was something that we swept earlier and we came down. But you can see right here, this was a last down close candle. We did not have a strong close. You can see we have this small weak ass close and then we start pushing up. Actually, this would be the swing low, right? Because this was a last low before we pushed up and broke this structure. Listen carefully. We started building trend line liquidity. A lot of buyers are getting in. A lot of breakout buyers are getting in. As I said in my previous video, trendline liquidity, breakout, breakout and retest, and people looking for breakout structure to the upside. And this would be something where they would be planning to buy, right? This gap. They would say, oh, let's go for longs here. And you can see the market purposely comes in here, gives them the reaction 496 to 562, like 30-point reaction, to make them understand, to make them feel like their trade is right, but it's not really right. We, on the other hand, are in sales. We are basically we're basically on all-time highs, right? This is the all-time high, and we are literally trying to short the market, right? So what exactly happened? Let's go back. Hold on. Right? What exactly happened? Why did I take this trade? You need to understand. As soon as I see this, and I see we are starting to chop, that came to my attention. I'm not ignoring all this. You see this big dump? We are not closing below, so I'm not really interested in this dump until we close below this, below this. And you see all these pumped up candles, they're just fake. We can go into timings later on, but I want to show you this, right? I came onto the 1 minute. Let's see, where is it? Yeah. So what exactly happened? We are gathering liquidity. You see, we make this high. Now I want to show you something else. I want to show you something else, that the reason why I took this as well is that I saw something on the left hand side as well. I saw this inducement right here, this high getting cooked, and then we have this zone from where we started breaking, right? Now most of the times, a lot of times, I've seen the price comes really close. That is a smart money trap. It comes close, entices the early sellers, and then it actually just rips up to the top. We can actually trade the fake move as well, but that's the reason why I took partials here. I mean, I closed my trade here. I could have fought it all the way till the bottom, but I want to know when exactly are we actually going to go for the bottom, right? So that was an additional confluence of taking the trade. What happens then? You can see right here. Let me just delete this, or let's just move this. You see, what confirmations did I have? We set up a high, we broke down, right? So early sellers are in. So this means this is a fake low. We have swept the fake high. Sorry, fake high. We have swept the fake high. Number one, we have gathered trend line liquidity. Number two, we have gathered number three, breakout buyers are getting in. Number four, breakout and retest. So we have shitload of liquidity, and that is just before New York. And the best part, it's Tuesday. Monday we have set up a high. We have swept that. So this became 100% high probably setup, right? What happened on the 1 minute time frame? You can see right here. We dump. We close below this. We have a strong close followed by another close. Then we pull up. We pull up here. We're creating all this area. You can see this area, right? Where was my entry? Exactly here. Exactly here. And I was putting my stops here. As soon as this dump started, I put my stops all the way to this candle, because there's no inefficiencies here for me to target. The price shouldn't go up. Now you might ask me, okay, what is this entry model? Why did you take this and not this one? I could have taken this as well. This was the last high before we broke down, and you can see the entry would have been top tick. Like basically there's no drawdown. You enter and the dump starts. But the thing is, I'm not that disciplined. If the price comes here and I'm seeing it's only 2 points, 10 points, 15 points, I'm ready to take that trade. I don't want to be perfectionist. See, instead of here, I'm taking it here. I just took it somewhere around here, I believe. Right? This is the last up close candle before we broke this structure, right? Then what was the additional confluence? We also broke this structure, you can see, with the very thick candle. So now I'm just waiting for the price to pull back. Another thing, if you just take the fib tool and you draw all the way from the bottom, right, till right here, we are in between this zone 0.705 and 0.62. Now this is basically, we are selling in premium. Wait, hold on, not premium. It's discount. Sorry, I keep forgetting. Right, we are selling at the discount level. We can actually sell here as well. This would have been my second trade if this failed, because I don't want to kind of take a big stop loss, right? We took this trade. Now, what exactly happens? What have we used? I've explained you everything. Just go rewatch this video and try to understand why I took this trade. We dumped all the way down, right? You can see here we give this small reaction. After we give this small reaction, we sweep this, and then we come up, enticing more buyers in the market, and then we dump again. And then the buyer said, okay, we have taken this low, we have taken this low, let's, and then it comes back down here, let's 935, let's try it long, 450 to 550. That's a good 100-point move, right? But they might be targeting for these highs. Market does is goes up, dumps. Now you will tell me, okay, why was I looking for all this? Number one, as I told you, we have the new week opening gap. New week opening gap. You need to keep this in mind. Price is drawn to it. What did the price do? We came all the way down. As I said, always we come close, but we don't really touch it. You could have traded that as well, and it goes up. But this was so late in the day. And most importantly, this indicator that I use, it shows me the previous day's highs and lows, right? See, NYPM high, sweep all the way down, goes up, new week gap gets filled. You can't tell me this is like coincident, right? You see the entire gaps gets filled. We sweep the gap, and then we started pushing up. And now, what am I targeting? The price is gonna keep going up because we are done with the selling for this. This is Monday, right? We have beautiful Tuesday. Wait, hold on, where is Tuesday? Yeah, Tuesday. We have Wednesday, right? We have Wednesday, Thursday, and Friday. What am I expecting on Friday? To rebalance and go higher. That's it. In my Twitter page, I have called this. All-time highs will be loading on NQ. Many will think the dump is here. If weekly CRT plays out, we will touch the sky. And we are going up. People saw this dump, right? People saw this dump right here. Where is it? This big dump, right? Exactly. Hold on. People saw this big dump right here. Oh, we're going down. We're going down. It's not the case. We went down. We came up. We went down. Rebalance it. Started pushing up. Now, all we are going to do is keep pushing up until we have some major news event or something that actually causes the market to pull down. So you understand, Monday, Tuesday, you can see this is exactly what I just showed you in the beginning of the video, right? We have Monday setting up the high, Tuesday sweeping in, Tuesday, Wednesday making low, Thursday rebalancing, and now we are going high. This is basically open high, low, close. Instead, we might be going for a higher high, high on this, or we actually might be closing at the 50%. We never know. Fridays are, sometimes low probability days, but it's okay. If you don't understand this, now what are the confluences? Think about it. Previous day high sweep, fake inducements, inducements, previous day high sweep, fib settings, break to the downside. We had everything. And the most important thing is having the best days to trade. Tuesdays, Wednesdays, Thursdays. Mondays and Fridays are garbage. The market is closing. Mondays, the market is fresh. We don't know. You never could have taken any entry here. Many traders trade that, but I personally don't like to because there's a gap here. The market can reverse anytime. It can reverse tomorrow, day after tomorrow. We never know, right? In the same day, it tries to fill it. And this is basically the easiest way to trade. If you want to be more cautious and you don't want to have the drama, you can just take, like you could have taken this trade, okay? And break up, inducement, simple as that. Yeah, price moved pretty quick. I use some ICD concepts as well. Yeah, we have this gap here, this big bearish gap, right? Big bearish gap, and you can just come here, draw the OTE levels. Okay, we are below 50%, but whatever, right? If you're trying to trade this gap, even then you could have taken this trade if you're just want your peace of mind, right? You don't want to like get into a lot of drama. Take this trade, put your stops right here, aim for basically the swing low somewhere here. This could have been an easy 1 to 5, and you can see the market just taps in, boom. This is what exactly 9:30. As soon as the market opens, we have this volatility spike coming in, and boom, basically simple 1 to 5. If you are smart enough and you're like, okay, let me just aim for the opening gap, or you can just aim for the CE, let's say 50% of the opening gap, you could have even taken this trade. Like how simple this is. You only need one trade. The biggest misconception is the more trades you take, the better. No, you only need one trade. If you have taken 1:10, you're good for the entire month. You don't have to worry about taking trades every day. Simple as that. Let's meet in the next video and I'll show you some other trade examples.